Hello everyone. This video will teach you how to place a trade in derivatives. I'm trading on a platform by the name Bybit. You can trade on other platforms like Binance or any exchange of your choice. Okay, so let's begin. So I have opened my Bybit and logged into my account already. So once you go to Bybit, you will see an interface like this. Okay, so let's go to derivatives. Okay, then you go down to USDT perpetual. So just you follow the arrow to the right. I normally prefer this currency pair. We have different currency pairs that you can place your trade in, but I normally trade with Bitcoin USDT, which is BTC USDT. So I'll open that one. So still waiting for it to load. Okay, so it has loaded, but some features are still in progress. So let's wait for it to load completely. This side here is for the chart that we are going to use to study the trend of the market. Okay, so as it's loading, let me just brief you on a few things. So this place here where you see BTC, USDT, if you click, you will see different currency pairs. Okay, so you can change your currency pair here. For now, I'm trading with BTC, USDT, right? Then we go to the right side here. Okay, this is where we normally place our trade. Starting from the top side here. Okay, let me close this. This is for the currency pair. So you can choose any different currency pair that you want to trade in. But let me close this for now. Okay. Okay, so the graph has also loaded already. Okay, and I was using some indicators. I think I have to close some of them and also hide some. So I'll be hiding all these indicators so that we will move together. Hide this one and this one also. Okay, so that's the chart for you. Okay, so let's come to this side here and observe a few things. So over here, top here, you see this one isolated, and you see 10x, 10x. Okay, that's the leverage. So the leverage helps you to use more than the amount of money that you have in your account to trade. Okay, so more or less, you can use borrowed money from the platform and then trade with. So when you see 10x, it means whatever money that you are trading with, they multiply by 10. For instance, if you have, let's say, 100 USDT or $100 you are trading with, and you choose a leverage of 10, then it will be 100 times 10, which is 1,000. So instead of you trading with just $100, they will allow you to trade with $1,000, which has its own advantages and disadvantages. The advantage is that now, because you are trading with a high amount of money, you can make more profit easily. Then the disadvantage is that if the market goes against you, then you are also going to lose out, right? You're gonna make more losses quickly, and you can even get liquidated if care is not taken. So when you are choosing leverage, choose something reasonable. Don't choose a very high leverage. You see, when I open here, it goes as far as 100x. Okay, so you can choose as a beginner maybe 3x or 5x or up to 10. Okay, but if you don't know, you are not experienced at all, then I will advise you to just put it at 1x, meaning that you are using the same amount of money in your trading account. Okay, and then up here you see, let me close and show you how I got this one so you can follow it. So what I did, I clicked, you see up here where the cursor is, I just click on the arrow, then this one pops up. So we have a cross and isolated. Basically, when you choose isolated, okay, let's come down here. When you are placing an order, you have to place the quantity, how much of the money you have in this account that you want to use for the trading. For instance, if I have $100, I may decide to choose 50% for the trading. So 50% of the $100 will be $50. So in as much as I have 100, so far as any trade that I'm going to place is concerned, it will be limited to $50. Okay, so when let's say the trade goes against me and all the $50 is used, or I lose all the $50, my trade will exit. Okay, meaning that I still have a balance of 50 sitting somewhere. But if you choose cross, and the trade goes against you, instead of exiting, it will just eat into the remaining $50 that you have in your account. Then, if care is not taken, it can wipe off all your account. So the difference is that the isolated restrict the amount of trading amount. I mean, the trading capital that you are using. When you use isolated, it only stays within how much you have indicated. But with the cross, when the amount you have indicated is finished, the remaining balance can also be used for trading, right? So that's it. So you set it and then you cancel. Many people prefer using the isolated. Okay, so here is where we place our trade, right? So let me go and show you how much I have. I only have $40 or 40 USDT in my account. Let's say if you don't have any money at all, the money is not sufficient, you want to add more money, what do you do? So we have a deposit, exchange, and then a transfer. Okay, so we're gonna choose one of those options. If you don't have money in your trading account at all, what you say, I'm using Bybit, then you have to deposit. Okay. Now I have some small money inside this account in my spot wallet. Normally, when you buy crypto with your fiat, the crypto goes into your spot wallet. So I'm going to transfer. I have about $10 that I want to transfer from there to this place. So let's assume that here you have nothing here. You have nothing here. It's zero, and now you want to start trading. So you click on transfer. So transfer, when this one pops up, we have transfer from and to. Okay, so since it's still loading, okay, now we want to transfer from the spot wallet to derivatives. So derivatives is the place where we execute this kind of trading. Okay, so we have to transfer from the spot wallet to our derivatives wallet. So the currency that I'm trading in is the USDT. So I have to indicate how much I want to transfer. As you can see, this is the amount of money or crypto I have in my spot wallet. So I'll just enter 10 USDT is 10.2, right? So let me say just 10. Then I'll just say confirm. So it's gonna move the 10 USDT from my spot wallet into derivatives. Earlier I had 40. Now you see that it has come up to 50, if you can notice here. So if it were zero, and now since I have moved 10, it was going to now be $10. So this is how easy you can move money or crypto to the trading environment, which is your derivatives, and then you start trading. Okay, but don't forget that the money first was actually deposited in my spot wallet. Then what I did here was to move it from the spot wallet, into my derivatives. Okay, so that I can proceed with trade. So over here, what do we do? Okay, so we indicate the quantity, the amount of money that you want to use for trading. If I select here, like, okay, up here too, we have two things here, right? We have three things: limit, market, and conditional. Okay, so the limit order is where you place a trade and then you leave it with a target, or you set a target that when the market reaches this value, then the trade must be initiated. Until it gets to that value, the trade will not start. You see, it will not be filled yet. I normally prefer the market. The market is instant, so it takes whatever the value of a currency is, and then it opens a trade for you. It fills the trade immediately. Okay, so we will indicate how much of the amount or the equity we have in this derivative account, how much you want to use for trading. If I select 100, it means I'm using all the $50. If I select 10%, so they calculate 10% of the 50, which is like $5. So just indicate, okay, so for the purposes of this transaction, I just click 10. Okay, so it takes only 10%. So this is where the isolated is important, because when I use 10%, it's only concentration only $5 of my capital or of my equity. So when the 5 is used, it's not going to eat into the remaining $45 that I have, if you get it. So yeah, so I've indicated that. Then another important thing we have to do is to indicate what we call a stop loss, and then take profit. Okay, so we have here, depending on whether we want to buy or sell. But before that, let me go and also show you something here. Now you see this chart here. Okay, we have different views here. Up here we have standard view. If I click, you see the standard view. And then we also have a trading view, and we have the, okay, so let's see how the standard view looks like. You can see here, it's not so different from the trading view, but the trading view gives you a much clearer chart that you can use for trading. So I personally prefer using the trading view. Okay, so that's it. We have the trading view. It's still loading, right? So we have this. These are candlesticks. Okay, now they operate in different time frames. I'm on the 1 minute time frame. Okay, I can change it to the 5 minutes. So each candlestick represent the time frame indicated. In other words, if I'm on the 5 minutes, it means that each candlestick will represent 5 minutes. I can come to the 15 minutes. So in that case, each candlestick is going to represent what 15 minutes, and we have 30 minutes, 1 hour, and so on and so forth. So depending on you have to pick one of these time frames. Every trader has which time frame they enjoy most. Okay, then once you do, you can now also think about another thing. You see that we have two different types of candles, the green and then the red candle. The green is for buy. You see, if you predict that the market is going to go up, for example, the currency we are using is Bitcoins, BTC, and then USDT. Okay, so the base currency, okay, which is the BTC, and the counter currency is the USDT. So we trade mainly with the BTC, the one on the left. That if you buy, it means you are buying BTC with the one on the right, which is USDT. If you sell BTC, it means you are selling it for USDT. Okay, so if you suspect that, or you're able to read and project that Bitcoins is going to rise in price, so as it is still low, okay, you buy. It's just like normal trading. When the price of the item is low, you buy it, and then you keep it, because you're expecting that the next few minutes or few days is going to rise. So we will buy Bitcoins when we think that it's going to increase in price or the value will go up. So we will hold it just after some time. When it increases in value, then we sell it. Okay, when it increases in value, we sell it. So that when you sell, you will then end up getting more profit, more USDT, right? Then you sell. So anytime it's also it gets to the peak when the price is so high, and now you suspect that it's going to decrease, it's going to drop. Okay, so instead of you keeping your money in Bitcoins for it to drop in value, you rather sell it. Okay, so when you sell, it's indicated by the red candle. So when you suspect that the trend is going to go down, you sell, which is represented by the red candlesticks. And when you suspect that the price is going to go up, you buy, which is represented by the green candlestick. You can change the colors anyway, but typically people use the green for buy and then the red for sell. So they call the green candle bull or bullish. Okay, so the bull candle, and we have a bear or bearish. So when the graph is going bullish, it means it's going up, meaning the market is increasing, or the value of the base currency is increasing. And then when the market is bearish, it means it's going down. The base currency is decreasing in value. So you should have just a basic knowledge or understanding about these things. Okay, so Yeah, so those are the candlesticks. So now the next important thing is to be able to predict the trend, whether it's going to go up or it's going to go down. So that is what will cause you to make a profit. If you're not able to predict, then it means you cannot make a profit. You see the thing. So in order to do that, we use indicators, which I'm going to explain in another video. Okay, which I'm going to explain in another video, so that this one will not confuse you and it will not be so long. So let's say this is the thing. I'm just going to guess anything, right? So it's going down. Do you think it will go down further? Then you go for sell. Another word for sell is short. You open short. Then if you think it will go up, you open buy. And another word for that is long. So you buy or you go long, and then you sell or you go short. Okay, so get used to the terminology. So here we have here, I have already selected market order, and then the quantity, that is how much of my equity that I want to use for trading. I selected 10%. Now let's say we want to sell. Okay, let's say we are convinced that it's going to go down. Okay, I'm just using this for illustration purposes. So I'm going to sell. Okay, sell short with TP, take profit and stop loss. So what is this take profit and stop loss? If I was to buy, or I were going to buy, then I was going to go for the one on the left to buy long, but I'm selling, so I select this. Okay, take profit is you are saying that, okay, now you expect that it's going to go down. At which point do you want to stop trading and take your profit? That is when it reaches maybe 21,600. When the price of Bitcoin reaches 21,600, you want the trade to automatically cut and then remove your profit for you. It's important, because if you don't do that, the price can go down and get your target and go up again. So and instead of you making profit, you end up making loss. Okay, so you set target that when it gets to this place, you can remove your profit, and you don't also have to sit by your computer all day, because you may have other things to do. So using the take profit is so important. And then the stop loss particularly. Let's say we are predicting that the price of Bitcoin will fall, it will go down. That's why we are selling. What if it doesn't go in that direction and it rather goes up? It means we are going to run at a loss. So we indicate the amount of risk we are willing to take. That when it goes up to maybe 22,000, the trade should stop. In that case, we are going to accept some losses, but then it will be a controlled amount. Okay, so that if it goes up in a very wide way, or it goes by a wide gap, it's gonna empty our account. Okay, we are going to lose so much that our account will go zero. So in order to avoid that, we put a stop loss, so that we indicate how much loss we are willing to take. Okay, so that is good business. You should be able to decide how much risk you want to take. That is risk management. So let's do these two. So our take profit, since we expect that the graph is going to go down, let's say we are seeing that when it gets to 21,600, the trade should stop and then give us our profit. Okay, so now let's see what it's showing here. It says that last traded price to 21,600 will trigger market take profit order. Your expected profit will be at 0.47. It means this is the profit I'm expecting if the graph goes in my direction. That is according to what I have predicted. Then the stop loss, let us place it over here, 22,200. That if it reverses or if it goes in the opposite direction. Okay, so 22,000. Let me just leave it at 22,000. Okay, so let's go and see. It tells you exactly how much risk you are taking on this stop loss. So it says that last traded price to 22,000 will trigger market stop loss order. Your expected loss will be 0.25. It fluctuates. Okay, so let's say 0.25 USDT. So in case the graph goes up, okay, which you don't want, then this is the loss you are going to make. So it gives you knowledge about what you are doing, you understand, so that you know exactly what you are doing. So if that's okay by you, then you conclude, you say open short, meaning you are selling because you expect or you are projecting that it will go down. Okay, so we go open short, then it will ask us to confirm. Okay, so this dialog box opens. It gives you all the details of your trade, what time you are opening it, what time you are expecting to come out of the trade, that is the take profit, and stop loss in case it goes against you and you've chosen isolated and stuff like that. So just confirm that yes, when these conditions are okay by you, just confirm it, then the trade will be filled. Okay, so we click confirm. Okay. Yes. So now we have placed a trade. So you can see over here, it gives you details of your trade. Okay. So failed. You see something like this. So already you can pay attention to this place as a beginner, unrealized P and L, profit and loss. Okay, percent. So now I'm at a profit of 0. Now it has come to 0.00, now 0.02. So it will be fluctuating. Now it's going into a loss. So it will be moving up and down like that. Okay. So let's say at a particular point in time, now I'm at a loss. You see, it's moving like that. So it has indicated, you see, with the red lines that I'm taking my profit at this value with the red line. You can adjust it by moving it over here, or you drag it a little bit, or you can come to this side. Let me scroll to the right. Let's go here, scroll a bit to the right. You see this painting, you can just click and then maybe adjust the values if you want, or you can adjust it just on the chart. Okay, so take your time and study it, and then along the line, let's say you don't want to wait and you want to close your trade. You can also close your trade by clicking on market or limit. Okay, so I can go to market, click on it, and then close my trade. Now I'm at a profit, so let me close it, confirm, then the trade will be closed. So order submitted successfully. So I have been able to open a trade and then also close the trade at the same time. So basically, this is for beginners. Okay, if you have never traded derivatives before, you can open a trade in derivatives, either in Bybit or in Binance or any other exchange platform, and then follow the same steps. They are just the same. It doesn't matter which platform you are trading. So next time we will have another video explaining more about how to know or how to predict the market using suitable indicators. So thank you for watching, and then give it a like if the content is helpful to you, and also subscribe for future content. Bye for now.